If you've been watching VAALCO Energy, ticker EGY, you already know this is a company that flies under the radar. But after digging into their Q4 and full year 2025 earnings call, I found 10 things that every investor needs to hear. Some of these numbers are genuinely surprising. Let's count them down. Coming in at number 10, VAALCO has now returned over $150 million to shareholders through dividends and share buybacks since Q4 2021. In 2025 alone, they paid out $26.5 million in dividends, and they've already announced the first dividend of 2026. For a small-cap E&P company, that's a remarkable commitment to returning cash. Number 9, VAALCO sold all of its Canadian assets in February 2026 for approximately $25.5 million. That works out to 2.7 times trailing 12-month operating cash flow. Since acquiring those assets, the company had extracted nearly $65 million in operating cash flow. Management called it the right time to focus on higher upside core assets. At number 8, Egypt continues to impress. The team drilled 20 wells over the past year and managed to squeeze in 8 extra wells faster and cheaper than budgeted. The result? Q1 2026 production is running consistently above 11,000 barrels of oil per day, well ahead of their own budget of 10,700. Number 7 is a story about collections that doesn't get enough attention. VAALCO started 2025 with $113 million in aged receivables owed by Egypt's state oil company, EGPC. By year-end, that balance had dropped to just $31 million, even after invoicing over $129 million in new revenue. They collected more than $210 million during the year, and they're now essentially on a current billing basis. That's a massive de-risking event for the Egypt business. Number 6, the balance sheet looks solid. Unrestricted cash climbed nearly $35 million during Q4 to reach $58.9 million at year-end, with only $60 million drawn on a $255 million reserves-based lending facility. No draws were made on the credit facility during Q4 itself. At number 5, Gabon's Phase 3 drilling campaign is underway and building momentum. The company drilled 2 pilot wells and a development well at Etame late in 2025, with more wells and workovers planned at Saint and Iburi platforms. Management projects Gabon gross production could reach between 20,000 and 23,000 barrels per day once the full program is complete. Number 4 is one of the most exciting developments in the portfolio. VAALCO was confirmed as operator with a 60% working interest in the Kossipo field on Block CI-40, just 8 kilometers from Baobab. The field carries an estimated gross 2C contingent resource of approximately 102 million barrels of oil equivalent, with 293 million barrels in place. A field development plan is expected to be submitted before year-end 2026. Number 3, the Baobab FPSO. After departing Dubai in early February 2026 following a successful refurbishment, the vessel is currently rounding the Cape and tracking on schedule to return to the Baobab field. Management expects the field to restart production in Q2 2026, followed by a 5-well development drilling program later in the year. Number 2 is the big picture production story for 2026. With Baobab coming back online, the Gabon drilling program delivering wells, and Egypt continuing to perform, management is guiding for a meaningful second-half ramp. The year-end 2026 exit production rate is expected to land between 25,000 and 26,000 working interest barrels of oil equivalent per day, a substantial step up from where the company sits today. And the number 1 takeaway, reserves value is rising even as production is temporarily suppressed. VAALCO's SEC-proved reserve PV-10 increased 8% to $410 million at year-end 2025, despite lower average pricing of around $70 per barrel. The 2P CPR PV-10 surged 26% to $859 million. Management made the point clearly. Compared to the current market cap, the stock remains undervalued. With a major production ramp on the horizon and a diversified multi-country portfolio, VAALCO's story is really just getting started. If you found this breakdown useful, don't forget to like and subscribe to get more earnings analysis from Earnings Central.